then we have Mr. Tawanda Mutukwa, who is the country rep for Faster Capital from Dubai. And he's also a co-founder in Motherland, which is an agricultural-based startup based within here in Zimbabwe. So he's going to give us some of his own insights and share some knowledge. Tawanda, thank you for joining us.
Thank you so much, Simba. It's a pleasure to be here, and hopefully we'll have fun as we go.
Okay, fun is the name of the game. And then we also have Mr. Tatenda Jakarasi. He is the co-founder of Munch. Munch is started as a food delivery business, and now it's ventured into logistics just within Zimbabwe, mainly Harare, and they're looking to expand. So he is going to give us some insights into his fundraising and how that's going for him and Munch and the business as well, and his engagements with investors. So Tatenda, welcome.
Thanks, Simba. Thanks for having me.
Okay, thank you.
I hope my 2 cents helps anyone who's listening.
I'm sure. Okay, so Tatenda, I think we'll start with you. Just so that we can frame the conversation and get an idea. So when you started I know you are involved in some fundraising at the moment. So what challenges did you not expect when you decided to start fundraising for your business?
Well, firstly, like in Zim, it's a different environment to when you look at stuff like Silicon Valley, just Africa in general. When you're talking to investors in Zimbabwe or within Africa, but I would say in Zimbabwe, most are looking for a majority stake when they're trying to invest in a company. So that's the hardest thing, because you're trying to show them that, hey, we're working with discounted cash flows. This is what we're projecting we're going to start making. But they're looking at actual revenues and they're trying to work out based on that. So that gives you a much lower valuation than you would get, just say, if you're a company in the States or in Europe, where guys can raise, even without just an idea, can raise $1 million, just say 10% equity. But here, just for me, 100,000, you find yourself getting asked for 40 to 50% equity, which just makes it so much more difficult, because you don't want to let go of a lot of equity so early when you know you're going to have so many other rounds.
Okay, so equity was the challenge. Okay,
that's the biggest hurdle
that you faced. Okay, so let me ask the same question of Tawanda. Hello, Tawanda? Tawanda, can you hear me? Tawanda? Tawanda, can you hear me? Okay, MK? Don't know what.
Thank you, Simba. Someone is complaining about the audio.
Yeah.
I think.
Can you
hear me?
I can hear you.
Okay, maybe you can mute your mic so that I can speak. Then you can interrupt me when you're
okay.
ready.
Yeah, let me ask you the question and frame it a bit different for you, since you're on the investing side. So
okay.
Tatenda has just said the issue of equity. You don't need to address that now, but what challenges have you faced? Now you're an investor, you're on the investor side. Let's give you your investor hat. What challenges have you faced, or what is the challenge when it comes to deploying capital to startups in Zimbabwe?
Well, thank you very much. As much as I'm an investor, I'm what you call an invested investor.
Okay.
Because I still own businesses, I
Mhm.
also have had to raise funding for some partnership deals that I've structured, and also to raise funding to fund other startups. I think the biggest challenge is the scale of the idea, and some of the guys have come in too early. May- Maybe you can mute Simba while least I talk, then you can unmute because there is a feedback this side. Okay, so the idea is the scale of what the startups ask for. Some of it is not scalable enough, because when you're talking scale, you want to look at exits that change your life. I think I always, when I look at a business, it has to be something that will change your life and also change the lives of those that you are trying to support. And also some of the startups, they come very early. Ideally, the time when you should come, you should have exhausted your own money, you should have exhausted your own friends, and you should have exhausted all your relatives' money, and you've got something to lose, then you can look for external funding. You have to unmute Simba. I can't hear you.
Let me follow. Sorry, let me follow that up. So, how many times do you get approached for investment, let's say in a month? And how do entrepreneurs find investors in Zimbabwe? Where do they go? How do they find people like yourself?
I will tell you, I get a lot of requests for funding from all over the world because my LinkedIn profile is quite active. So I write some articles. So today I had to decline a fantastic business offer. Someone is launching an Uber for yachts in Cape Town, and they wanted 50,000 US dollars for me and was willing to give me 30%. And I said, wow, this is very exciting. And I also got another one who wanted to set up Uber for private jets. So I get fantastic offers almost every other day on LinkedIn. But coming to Zimbabwe, the landscape is different. The issue of investment is still something that is growing. It is something that we need to build in terms of the ecosystem. So generally, I think platforms like yours are platforms where we can get investors coming in, and also platforms like, unfortunately, because of COVID, we can't do meetups, pitch days, and things like that. Those are very great in terms of investors being involved. I think Judith,
Can go ahead, MK.
yeah, so that's the situation, to say that in Zimbabwe here, we need to do a lot of activities and events. Unfortunately, COVID has messed us up because before then, there were a lot of pitch days and meetups. Different incubation hubs have been offering those, but unfortunately, as a result now, it's been a bit difficult to get a platform where you can meet an investor. But also, I think generally, the issue of investment is not, we don't have a vibrant ecosystem. It is a few players that mainly of them are equity investors, in the sense they look at buying existing businesses. Like we have Takura, you get them getting a few businesses, that's it. They're not interested in startups. So the actual angel investment startup scene is something that is early, that we're trying to set up as heritage angel investors, so that we can promote upcoming early stage investors.
All right. Thank you for that, MK. We were just joined by Luther. Luther, who's here from Nigeria. Luther Lawoyin is the CEO of Price Pally, and they recently raised some money. So Luther is going to give us some insights as well. Luther, welcome. but I'll call on you just now. Let me speak to Tatenda. Tatenda, are you there? This is for you. So
Yeah, Simba, I'm there.
yeah, so when you started,
Hi, Simba, I'm there.
yes, when you started the fundraising process, how long did you expect the cycle to be? How quickly did you expect to raise funds?
Well, the thing is, I knew especially in our country that it would take quite a bit of time because you're trying to match with the right investor, and you don't just want to accept anything just out of desperation or anything. So you kind of want the right deal, and so I'm willing to say no. The best deal is the one that you say walk away from. So I've heard, and so I've had to let go of some deals based on what we want to see within the company. So yeah, it's taken a bit of time, but now we just found, so like last month I was in Cape Town, and I got someone who's now very interested at a very good rate because they also invest in a lot of startups, and they were interested in putting in money at a decent valuation, which is also good for our company. So that's something I'm excited about because at least I'm sure we'll see a close in the next month or two. So yeah, it's taken long, but the patience is worth it.
What were your initial, okay? And in the local market in Zimbabwe, what is the feedback from investors? MK spoke about being too early. What sort of responses have you received?
Well, so you see a lot of the guys who have the money start seeing opportunities in ways that if they can get control, they can see maybe how it'll benefit them. If they've got 50, 51%, that's how they only see the benefit for them, in that they'll have control of the company while you're running it. So the feedback has been, you need to be able to give more equity. I come back to that because that's probably the biggest argument I've had. The feedback is also that a lot of guys will be like, for example, and we are like a gig economy, right? And we don't own our bikes, we don't own anything. Some will be like, you need to start owning your bikes, reduce your costs. And we're like, no, for scalability purposes, we feel like it's better for us to be lean and to focus on our tech and improve on our tech. And that's going to help our scalability. So that's been some of the feedback in terms of give more equity. You're not going to get that money for the valuation you're giving. You're asking for too much. Yeah, things around that. And you're talking to old school, but they focus on revenue and they don't focus on things like 5-year on how discounted cash flows are going to help and how your projections are going to help that you're going to reach. You assume you're going to reach this goal. They go on what is as is. Are you guys worth that much? And so it makes it really difficult for any startup to raise significant money without losing a chunk of their ownership. I don't know if I answered it.
Yeah, you answered. So my next question would be, so what did you have to prepare when you decided to start fundraising? Because one of the things that happens with startups is they get into the fundraising cycle, they've got a business plan, they've got a great idea, and then things fall apart when it comes to due diligence. So what did you have to prepare as you started getting into fundraising? What were the due diligence tasks that you had to go through?
So firstly, like you mentioned, a business plan, but most investors are more interested in things like a pitch deck, because at least a pitch deck just gives kind of a summarized view of where you want to go. And a lot of people don't have time to be going through a whole business plan. So a pitch deck, good cash flow projections of what you plan on having, and then current financials for for a period of time that you've been operating for. Some would want to see at least in the last year of how your thing has been doing. And initially we hadn't done all that to put it to detail, but a lot of people would want to see detailed financials to see the position, and you just have to be very transparent. NDAs have to be signed, and you just have to have those discussions. And then company docs, just to see, okay, is this company legit? Is it operating? But that's mainly it. And then I would want audited accounts, just to see at least for the past 6 months your performance, and to see are those books not being cooked. So some prefer, it depends with the investor how serious they are about it. Some would want audited accounts. But yeah, that's mainly it. At the
Okay.
end of the day, people want to see the numbers.
Okay. All right. Let me switch to MK. MK, you're speaking about pitch nights. Yes, we're having a pitch night at Tech Hub next week, Wednesday. So everyone is welcome to join. But adding to what Tatenda has said, MK, what have you found to be the most common shortfall when you then perform due diligence on startups? When you're thinking of investing, what do you think is one of the things that one of the biggest mistakes they make in the due diligence?
Okay. Thank you very much, Simba. I would certainly like to come and attend the pitch event. Okay. I think I need to qualify the different types of investors here. Typically, in advanced markets or in markets, there are those that invest in at a later stage. And these are the people who are normally called venture capitalists. In Zimbabwe, certainly they are few and far apart. And most of them are equity players. What do I mean? They take money, they buy companies, they operate those companies, and they take a significant stake and take management roles. A venture capitalists who give you money and don't ask for control, they are very few and far apart. Of course, we've seen government making moves. Last year, part one, in the budget, there was an establishment of a venture capital regulation, and there was money set aside. But in terms of operationalization of that, I'm not so sure how far that is gone. Secondly, there is those who invest in early stage startups like myself. These early stage startups investors are called angel investors because they don't just give you money, but they open their networks, they mentor you, they coach you. And these are the ones who come in early enough, but at a stage where you have exhausted your money, your relatives' money, your friends' money, but you have a minimum viable product, or you have a prototype which is now doing a market validation. This is the space that angel investors should play a role. It's not idea stage, but it is a prototype where you are. And then from there now, we can enable you to do a market validation and then be able to go to revenue. Or it will be early revenues where you are trying to look to scale up before you go to what is called a Series A funding. So I think we need to be very clear about that. Okay, coming for me as an angel investor, we invest in the individual mainly. So the soft issues are important for angel investors because we are going to work closer together than just give you the money. It's more like kind of a courtship. So there are soft skills that I look at. For me, when you want an investment from me, I want to have tea with you. I want to see if we've got chemistry. And I want to see and understand a bit about your team. And I want to understand a bit about the skills that you have. And I would like to understand. Also, I want to see if you are willing to take advice. Some startups, the founders, because they feel like that they know it all, they are headstrong, they don't take advice. And those kind of people, it's a challenge to invest in them because you are taking a risk. The business is not going to make you money. And an angel investor comes in anything from 3 to 7 years. So it's a long journey together. So for me, the soft skills are important. The attitude, the go-getter attitude, the all-in, like to say you have gone in. everything you've got something to lose. Not someone who will say, if I get a good job in Dubai, I'll leave. And someone who's not rigid and inflexible. So for me, those are soft skills. And most of that's where the startups, maybe I see that some of them are lacking in that area, to say that it's a personal relationship, it's a human being to human being interaction. So other than, of course, documentation that that we talked that Tawanda talked about, of course, it's an issue in terms of documentation, in terms of the financial statement, the cash flows. Startups struggle a lot. Even the financial language, some of the startups, they are not clued up about the financial language. So I think those are the key, those areas that I've seen, at least for me, where I'm coming from.
Okay. Let me just add, I just want to add to that. So your investment criteria, let's say they meet the requirements in terms of team and synergy and you guys get along. Which other metrics do you look at? Which other metrics are very important to you when you're investing?
Yes, for me, look, I've been in business since 2000. So I've been in business for 21 years in my own businesses. And I started the investment game in 2016, let's say. So for me, one of the things is the high growth, the team. I need to look at the team dynamics. High growth ambitions. There must be people who are not trying to solve a local problem, but I want to get fantastic exits. I know that there are certain jurisdiction issues that are limiting us as Zimbabwe, but there are always ways to find a way to deal with it. So high growth ambition, someone who believes that, look, the numbers, we can make the millions and they are not afraid of the numbers. I'm looking for a team of at least 2 people, at most 3 people normally. One of the areas for me, I'm a bit hesitant to invest is in a husband and wife team. This is my own personal issue to say that I will not feel comfortable to invest in a husband and wife team. Also legal registration, trustworthy and transparent. And also I've mentioned issues of skills in terms of complementary skills. And also I mentioned fully invested, they should be all in and they've got something to lose if the startup fails. I will not invest in someone who's still working somewhere and someone who has not spent money to build the prototype and wants me to do that for them. I will not. Also, there's obviously on the product side, the evidence of a large market, and also there must be defensible technology or patent or IP, something that's unique. And also I focus on the sector that I can understand or I can bring value. Myself, I'm a B2B kind of investor. Look, I've been in that business for a long time, but I can look at B2C, but it must be compelling. And the product also must be so deep in terms of building an ecosystem more than just a website or an app only. And of course, the MVP I mentioned, the global appeal and opportunity to scale given. And then of course, we have on the finance side, there must be some early stage income. You must have convinced someone to part with $1 or $2 or something to show that there's been some market validation. And then at least even from a pre-money evaluation, there must be something to say, okay, this thing is doing $10. If we put fuel, this thing can take off. And of course, I'm going in long term, 3 to 7 years, I'll be looking at 10x valuation. And yeah, so those kind of things. But one of the things I like to work with other partners. So I like to co-invest with other partners. So someone must be willing to do that. But another issue, in terms of NDA, we will sign for proprietary platform, not for brilliant ideas.
Okay, MK, let me just cut you off. I want to bring Luther in. Luther. Can you hear me?
Hi.
Hi, Luther. Welcome.
Yeah, I can hear you.
Yes.
Thank you.
Thanks for joining us. Luther, I know you raised
No problem.
money.
Sorry, I came in late.
Yeah, no, it's fine. I know you raised money at Price Pally.
Yeah.
That was from angels, if I'm correct.
No, so it's a combination of VCs and angels.
Okay. So just give us some
Yeah.
intro into this. This is Nigeria, so it's a different market. And Nigeria is booming
Yeah.
at the moment. So how did you find
Yeah.
how did you find these VCs and the angels? Given you only started this business in 2019, correct?
Yeah. November
Yeah.
2019. Yeah.
Mm-hmm.
So relationships basically. So it's from one, VC friend who knows another VC, or so we had some help with the first VCs who got on board. Green Tech Capital, they got on board quite early, so we got some help with the investor relations and all of that. So I think it's a result of the fact that, like you said, the scene is booming in Nigeria now because of it's been a long time coming. We've had difficult times, similar. I mean, just 5-6 years ago, this story was the story I'm hearing about. The difficulty in your part of Africa was what was yet around that time. Before Price Valley, I had a venture called Lucy.ng, and I could only raise, at that time we could only raise from an angel, a local angel. Every other attempt to raise outside, to get a VC, whatever, didn't work. And I guess it was because of the conditions then. So I think the scene came up to this boom that you see now because people just kept working, like we just kept building things and all of that, and sooner or later things will change because investors are looking for where to put the money. There's a lot of money out there and they're looking for where to put it, but some things have to just be in place and all of that for them. But that takes some bit of time. But I definitely know that things will change, and in Nigeria it's even getting more because now we have a company at a local company at a $1 billion valuation. We had an exit, we pay stacks, stuff like that. Signals to the world that things are happening here and they really want to come. So I think it's just a matter of entrepreneurs just keep hustling, just keep pushing it, just keep getting the word out there, and to get investors. I think what works best is relationships. So it's really important to whenever you can build that relationship, however you can do it, try do it so that you get from one, referrals work a lot. I think from my experience, and the idea too works a lot. Like if you have a super idea that is that is bound to make money in the context of your own country, something that actually solves the